Hi everyone, welcome back to Corporate Decoder, the place where we decipher all those corporate documents so you don't have to. Today we are diving into a proxy statement which might sound dull, but trust me, it's where companies spill the tea on juicy details like who's getting paid what and what big decisions are coming up. It's like reality TV for the business world, and we are here to give you the highlights. So what is LTC Properties proposing to its shareholders? Think of it as a to-do list for the company. They're asking for votes on things like electing directors, approving executive pay, and even something that sounds like corporate spring cleaning, restating their charter to increase the number of shares they can issue. First, let's talk about who's running the show, the board of directors. It's like the company's version of Congress. You've got names like Bradley Preber, Cornelia Chang, and Wendy Simpson. Most of them are independent, meaning they aren't company employees. It's important because it helps keep things fair and balanced. What exactly does LTC Properties do? They're a real estate investment trust, or REIT. It's a fancy term for a company that owns or finances real estate. In their case, they focus on properties for America's aging population. Think assisted living and skilled nursing centres. They invest in these properties and then collect rent. 50% of their investments are in private pay seniors housing and 50% in skilled nursing facilities. So how did they do last year? They exchanged mortgage loans for interests in joint ventures, contributed money to acquire a seniors housing community, and originated a new mortgage loan. They also got a bunch of cash from loan payoffs and property sales, and signaled the launch of a rider platform. Basically, they were buying and selling properties to shake things up. So they improved their liquidity, which simply means they had more cash on hand, about $680 million at the end of the year. It's always good to have a healthy bank account. All right, let's switch gears to how the company is run. This is what they call corporate governance. They have a lead independent director. All board committees are made up of independent folks, and directors are elected every year. All these things help to avoid conflicts of interest and keep management accountable. Now, for the part everyone wants to know about, who gets paid what? When it comes to executive compensation, the idea is to attract, motivate, and retain talented executives, align their interests with the stockholders, and reward them for their hard work. Elements like base salary, bonuses, and long-term equity incentives are all part of the mix. Time to elect some directors. At this meeting, 6 directors will be elected. One long-serving director, Boyd Hendrickson, is leaving. The board recommends voting for Cornelia Cheng, David Gruber, Jeffrey Hawken, Bradley Preber, Wendy Simpson, and Timothy Treach. Let's dive into some of these names. Cornelia Cheng brings financial experience, especially in healthcare. David Gruber has a long history in investment banking. Jeffrey Hawken has 40 years experience in the commercial real estate industry. Bradley Preber has a lot of experience in the commercial real estate industry. Bradley Preber has a lot of experience in the world of public accounting and risk, and also has experience in cybersecurity. Wendy Simpson is the executive chairman. She's been with the company for decades. Finally, Timothy Treach brings healthcare expertise to the table. How much are the directors paid? In 2024, non-employee directors got a mix of cash and stock awards, typically around $200,000 total. Bradley Preber got less due to him joining later in May. The company has a code of ethics and corporate governance guidelines. The board also has several committees, including audit, compensation, environmental, social, and governance, investment, and nominating and corporate governance. The company also focuses on risk management, cybersecurity, and corporate responsibility, which are essential topics in today's world. This is where shareholders get to give a thumbs up or thumbs down to the way the company's top executives are paid. It's not binding, but the board listens. The company wants you to approve Ernst & Young as their accounting firm for next year. It's pretty standard stuff. How much does Ernst & Young cost? About $892,000 for audit fees, plus another $118,000 for tax services in 2024. The audit committee makes sure the company's financial statements are accurate and that the auditors are doing their job right. The audit committee says everything is in order. Here, the company wants to increase the number of authorized shares. It might sound like jargon, but it means they want to have more stock available to issue in the future. They're asking to increase shares from 60 million to 110 million. Let's move on to more executive compensation talk. For 2024, Wendy Simpson, Pamela Shelley Kessler, Clint Malin, and Caroline Chicale were the top dogs, the named executive officers. Now for some important numbers, debt to enterprise value of 29%, debt to earnings before interest, taxes, depreciation and amortization is at 4.3x. The company has lots of liquidity cash available. Executives get rewarded with annual bonuses to motivate them to achieve higher goals. It is also important to have equity incentives, meaning that their compensation is tied to stock price. The company prohibits hedging or pledging company stock by its people. It also includes something called a clawback policy, meaning if executives mess up the financials, they have to give back some of their pay. How much did these people actually get paid? The amount that we all care about. Wendy Simpson as CEO had total compensation of approximately $5 million. Pamela Shelley Kessler and Quint Mellon as co-presidents each made approximately $2.6 million. Executive Vice President Caroline Chickhale made approximately $1.3 million. The majority of their compensation is coming from stock awards and other compensation instead of just the fixed salary. What happens if these executives get fired or there's a change in company control? They could get severance payments and continued health insurance. Wendy Simpson would get the most, over $3 million in cash severance and a big boost to her retirement and medical benefits. Let's take a quick look at who owns this company. BlackRock, Vanguard, and State Street Corporation are the big players. When it comes to the company's top executives and directors, most do own a sizable chunk. Wendy Simpson owns the most stock out of the executives. Finally, some important financial metrics. Funds from operations, or FFO, excluding some one-time gains, was about $117 million, and funds available for distribution, or FAD, which is another way to measure cash flow, was $118 million. These numbers are key for REITs because they show how well the company is really performing. So, what's the story here? LTC Properties is working to position itself for long-term growth. They're making strategic investments and selling off properties. Also, their liquidity or cash on hand is looking great. I would say I'm neutral on their strategy. There doesn't appear to be anything especially worrying about them, but they are not especially exciting and high growth either. That wraps up our decoder on this proxy statement. Hope I was able to simplify the content for you and give you a peek under the hood of how companies like LTC Properties work. Thanks for watching Corporate Decoder. If you found this breakdown helpful, be sure to hit that like button, leave a comment, and subscribe for more corporate insights.